Whether you're a freelancer, small business owner, or salaried employee, your relationship with your accountant should be more than just a once-a-year tax filing transaction. A knowledgeable accountant can serve as a financial compass, helping you minimize taxes, plan for the future, avoid compliance missteps, and take advantage of financial opportunities. But like any relationship, communication is key. Asking the right questions during your annual review not only makes you a more informed client, but it also helps your accountant provide better guidance tailored to your needs. The following 10 questions are essential for anyone who wants to turn their accountant into a year-round financial ally, not just a seasonal necessity. 1. What tax law changes should I know about this year? Every year, tax laws change, whether it's shifts in deductions, credits, income thresholds, or retirement account rules. Your accountant should be up to date on the latest federal and state tax code revisions and how they specifically impact your situation. For instance, the IRS may change the standard deduction, child tax credit, or limits on 401k contributions. State-level changes might impact your property taxes or business licensing requirements. Asking this question ensures you're not caught off guard by new compliance rules or miss out on new savings opportunities. It also gives your accountant a chance to flag issues unique to your income bracket or business structure. 2. Am I taking advantage of all available deductions and credits? Deductions reduce your taxable income, while credits reduce your actual tax bill, so both are crucial to optimize. A good accountant will explore deductions specific to your profession, family status, business expenses, home office use, charitable contributions, and education-related expenses. Similarly, credits like the Earned Income Tax Credit, EITC, Child and Dependent Care Credit, or the Saver's Credit might be available to you, depending on your circumstances. Every dollar left on the table is money lost. Your accountant should review your financial picture in depth to uncover any tax benefits you might not be using, and you need to initiate that discussion with this question every year. 3. Is my business or side hustle structured correctly for tax purposes? If you run a small business or side hustle, the structure you choose, sole proprietorship, LLC, S Corp, or C Corp, can significantly affect your tax liability. Your accountant should assess whether your current structure still makes sense or if switching could save you money. For example, an LLC taxed as an S Corp might allow you to split your income between salary and dividends, potentially reducing self-employment taxes. Even if you're just freelancing part-time, the way you report income and expenses can make a big difference. Ask this question annually, especially if your revenue has grown, you've hired help, or your goals have changed. 4. What can I do now to reduce my tax bill next year? Tax planning isn't just about filing, it's about preparing. Ask your accountant what proactive steps you can take now to minimize next year's taxes. This could involve adjusting your W-4 withholding, increasing retirement contributions, strategically timing large purchases, harvesting investment losses, or taking advantage of education or energy efficiency tax credits. Business owners might look into prepaying expenses, deferring income, or making equipment purchases before year-end. The earlier you ask this question, the more strategies your accountant can implement throughout the year instead of scrambling to react in April. 5. Am I paying myself in the most tax-efficient way? If you're self-employed or own a business, how you pay yourself matters. Are you taking a reasonable salary and the rest in dividends? Are you overpaying self-employment taxes? Could a solo 401k or SEP IRA help you lower taxable income? For W-2 employees, the question shifts to whether bonuses are structured efficiently or if flexible spending accounts, FSAs, and health savings accounts, HSAs, are being fully utilized. Asking this annually lets your accountant adjust strategies to account for income fluctuations, new tax laws, or changes in your business model. Ultimately, it's about maximizing take-home income while legally minimizing tax burdens. 6. How can I improve my record-keeping and financial organization? Accountants can only work with what you give them. Poor record-keeping leads to missed deductions, higher prep fees, and increased audit risk. Ask your accountant for honest feedback on how to improve your financial tracking. They might recommend using apps like QuickBooks, Wave, or Xero for business income, or even just categorizing personal expenses in a spreadsheet. You may need to better track mileage, save digital copies of receipts, or set up separate accounts for business and personal finances. A clean financial system saves time, reduces stress, and empowers your accountant to do their best work on your behalf. 7. What are the biggest financial red flags in my current return? A crucial question that often goes unasked is, what in my tax return might raise IRS suspicion? Your accountant should flag anything unusual, such as high charitable deductions relative to income, recurring losses on a Schedule C, large home office deductions, or unusual business expense ratios. These aren't necessarily problems, but they could invite additional scrutiny. Being aware of potential red flags lets you gather the right documentation proactively and prepare for any future inquiries. An accountant's job is to minimize your audit risk while maximizing your legal tax benefits, and this question puts that principle into practice. 8. Am I saving enough for retirement and in the right accounts? Your accountant isn't a financial planner, but they can offer excellent insight into whether your retirement savings strategy is tax efficient. Ask whether you're taking full advantage of available vehicles like 401ks, IRAs, HSAs, or SEP IRAs. Are you over-contributing, under-contributing, or eligible for tax credits? They can also flag whether Roth contributions make more sense for your tax situation or if you'd benefit from a traditional IRA's upfront tax deduction. For business owners, your accountant can help you weigh different plans, such as a simple IRA versus a solo 401k. Every year that passes without optimized retirement planning is a missed opportunity for compound growth. 9. What happens if I get audited, and how do you support me? No one likes to think about an IRS audit, but it's better to be prepared than blindsided. Ask your accountant what happens if you're selected for audit. Do they offer representation, help prepare your records, or handle correspondence on your behalf? Will there be additional fees for audit support? Also, inquire about their audit history, how often their clients get audited, and what common triggers they've seen. This conversation not only gives you peace of mind but also lets you clarify roles and responsibilities before problems arise. A solid accountant will also help you audit-proof your return as much as possible during the initial prep phase. 10. What other professionals should I be talking to? Good accountants know when to bring in other experts. They may recommend a financial advisor for investment planning, an estate attorney for wills and trusts, or an insurance agent to optimize your coverage. Especially if you've had a major life change, marriage, divorce, new business, inheritance, or real estate purchase, it's worth asking if you need other professionals on your financial team. Your accountant can also coordinate with these professionals to ensure that your financial plan is cohesive, compliant, and aligned with your tax strategy. This question keeps you forward-thinking and helps you build a financial support system that evolves with your needs. Your accountant is one of your most valuable financial allies, but only if you use their expertise proactively. By asking the right questions each year, you turn tax season into a powerful planning session for the months and years ahead. From uncovering tax breaks to improving business structures, catching red flags, and preparing for retirement, your annual sit-down, or Zoom call, with your accountant can yield serious returns. Think of it as a strategy session, not just a formality. These 10 questions will not only improve your current financial outlook but also build a foundation for long-term success, compliance, and peace of mind. Don't wait for problems to arise. Ask early, ask clearly, and turn your accountant into a year-round asset.